Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Terrific to have your company here at ausbiz. So let's take a look, begin on Friday where we finished up on global markets. So they did rally with November marking Wall Street's biggest monthly gain in a year. That's due to investors pricing in Donald Trump's pro-business policies. Major indices, the S&P 500 and Dow reaching record closing highs in the shortened session on Black Friday, but also off the back of Thanksgiving Day, lifted by technology stocks. Nvidia gained some 2%, Tesla also rising almost 4%. Now for the week, the S&P 500 gained 1%, the Nasdaq 1.1%, and the Dow climbing 1.4%, and the Russell 2000 small cap index 1.5% higher after hitting a record high earlier in the week. So investors monitored shoppers' response to deep Black Friday discounts. Adobe estimated consumers would spend a record or close to $11 billion in online purchases. That's up 10% from Black Friday last year. So retail was in focus as the holiday shopping season kicked off. Shares of Target climbed along with Macy's, and chip stocks rebounded from earlier declines in the week, sending the Philadelphia Semiconductor Index 1.5% higher. And the small cap Russell 2000 Index also rose as Treasury bond yields retreated further from multi-month highs. Well, taking a look at the economic data, and over the weekend, China's factory activity expanded modestly for a second straight month in November. The Purchasing Managers Index rising to 50.3, a 7-month high from 50.1 in October, above the 50 mark, which separates growth from contraction, and beating a median forecast of 50.2 in a poll. The official PMI data adds to a string of recent data suggesting a blitz of stimulus is finally trickling through to the world's second largest economy, just as Donald Trump ramps up his threats of tariffs. And in Europe, annual Eurozone consumer prices rose 2% in October to 2.3% in November, or from 2 November, I should say. Now, US government bond yields dropped during the holiday shortened market session on Friday, extending a weekly bond rally spurred by optimism about the new US Treasury Secretary, or the nominee at least, and some respite from inflation concerns. The US 10-year yield, the yield there falling 6 points to 4.18%, near its lowest point in more than a month, and 2 years sliding at 5 basis points to 4.16. Now, currencies, they were mixed against the greenback in Euro and US trade. As you can see, the Aussie sitting at 65.1 US cents. And in terms of Bitcoin, having a strong session over the weekend, closing in on 98,000 US dollars again. On the commodities front, global oil prices fell on Friday amid easing concerns over supply risks from the Israel-Hezbollah conflict. And for the week, Brent shed more than 3%. And gold prices were boosted by a drop in the US dollar and persistent geopolitical tensions. Gold lifted more than 0.5% during Friday's trade to $2,681 an ounce. Base metals, they were high. Copper futures up 0.2% over the week. Iron ore futures back above $100 a tonne as stronger economic outlook for China lifted market sentiment. The steelmaking ingredient up, as I mentioned, 0.5% over the week. Well, let's get across what we can expect this week, and we're going to cross the ditch to see how markets have opened there. Greg Smith joining some Devon Funds management. Greg, happy Monday to you. How have you opened in New Zealand?
Oh, hi there, Andrew. Great to be here, and happy Monday to you as well. It's a glorious day here in Auckland, so that's always good. Summer's starting. But yeah, the market, the NZ50 is flat at the moment, 13,066. So we've got Auckland Airport, we've got Mainfreight, we've got Meridian, they're on the up. Fisher Paykel Healthcare, which is our biggest listed stock, is down, but it's had a cracker of a year this year. I mean, it's up nearly 60%. So yeah, we're coming off a good month, so we're up around about 3.4%. For November. See, following those US markets higher to a certain extent, but certainly not as strong as the Dow or indeed the Russell 2000, which you mentioned. But yeah, a lot of optimism here around rate cuts. Yeah, we had another one last week. Our dairy industry is still doing well. Measures of business and consumer confidence are picking up, but yeah, from a fairly depressed base. So yeah, it's generally a fairly pretty good sort of vibe as we start the final month of the year.
So equity-wise, how are you seeing the market perform as you head into Christmas, and perhaps how's it set up for next year, Greg?
Yeah, we're talking about sort of the centre rally soon, aren't we? But often, December, is not all smooth sailing, and obviously there's a lot of optimism around, the Trump tax cuts. It seems the negative aspects of a potential trade war have been put to one side, and you mentioned next year. Maybe that's something that will come up more in January when Donald Trump actually sort of takes office. So we've seen yet more posturing over the weekend with them talking about putting 100% tariff up on BRIC nations if they continue to undermine the or challenge the reserve status of the US dollar. So this is a story that's not going to go away, and whether it's posturing, whether it's sort of trying to negotiate a position, but it seems the markets have sort of put this aside for now. We're coming off a pretty good earnings season in most places. There's optimism around the economy, so markets look like they might roll with it, but you never know if there's more of these sort of posts over the coming weeks that might unsettle things a little bit.
So, Greg, the Kiwi economy has been in a hole, obviously, and that's why we're seeing those really deep cuts by the RBNZ. You mentioned consumer confidence. Is that lifting as those rates come off?
Yeah, there's lifting, Andrew, from a position of weakness. So with the ANZ Roy Morgan Consumer Confidence Index, it was up around 9 points in November to 99.8. So potential drivers of respondents cited as being falling interest rates, a possible turn higher in the housing market, which is interesting because I'm not really seeing that now. I mean, clearance rates are still very low, but easing inflation. Now, the interesting thing as well there was there's some similarities to the business confidence report, but Kiwi consumers have a slightly different view on inflation. They sort of see it hanging around 4%. Businesses see it tracking towards sort of 2%, which is the RBNZ's goal. So historically, consumers have overestimated inflation. I suppose they sort of see the worst. But there's some positives here. But look, it's not all celebratory mood just yet. So a net 22% expect to be better off this time next year. A lot of that's to do with those lower interest rates and falling inflation. But it'll be interesting to see how our Black Friday sales go. And the 13% said it's still a bad time to buy a major household item. We're still feeling the pinch when you look at it like that. And people are sort of optimistic about the future, I suppose. They see better times ahead. But the reality is, the here and now, it's tough out there for many, particularly those that have yet to come off higher mortgage rates. And also a lot of businesses are doing it pretty tough as well. But the positive would take the glass half full approach, and business and consumer confidence has picked up, but from very low levels.
So, Greg, the consumer very much in focus at the moment because we have Black Friday, Cyber Monday today, looking at that retail trade amidst these, what are perceived as significant bargains. What are you looking out for, particularly with those consumer-focused stocks?
Yeah, I think there's a lot of similarities with the earnings season, Andrew. So, I think the retailers are quite a big surprise packet of the reporting season, but consumers are being very selective. So, you mentioned Target, a little bit off target in terms of its results, but shares of Walmart, they've hit record highs, so they're doing very, very well at that sort of end of the market. And then you've also seen some, luxury names or sort of higher end names, Abercrombie and so on, do quite well. So consumers have cash in their wallets, but they're being highly selective. And I think and they're out for a bargain, as you mentioned. I think you saw that over the Black Friday weekend. So if you're a retailer now, you have to be online. You can't be relying on bricks and mortar, because you look at the trends from the after Thanksgiving in America. So in-store traffic down 8%, but you look at online sales up nearly 15% to $10.8 billion US. That was according to Adobe. So Americans out there shopping. Saturday was going to forecast to be another 5 billion. Likewise on Sunday, and of course Cyber Monday tonight, or globally in the US. So they see that Adobe as being over $13 billion. So we're going to be up 7% thereabouts if those forecasts are right on last year. So Americans are out there spending. That's a good sign. It shows the resilience of the consumer, but they are being selective. Although I also know they're actually still prepared to spend money on experiences. So Moana 2, they had the record for a Thanksgiving weekend, 220 million there at the US at the box office. So the Americans certainly out there spending, but being selective.
All right. Well, we'll see if that translates locally for at least you there in New Zealand for the consumer. See perhaps if that consumer confidence turns into the willingness, I guess, to open the wallets a little further. Greg, great to get across what you're seeing there. Thanks for joining us from Devon Funds Management.
My pleasure. Have a great day, Andrew. Bye.
Cheers. All right, a quick check of where we're likely to get going locally. In fact, let's first take a look at the week ahead there. Yeah, we do have the September quarter balance of payments, third quarter GDP for Australia that'll be revealed on Wednesday, as well as international good trade balance. So to the local market, expecting a positive open. SPI futures up 0.25%. Stay with us. Juliet's going to take you through the open in just a couple of minutes' time.